Breaking right now, as expected, a huge sell-off on Wall Street today as the markets react to yesterday's reciprocal tariff announcement from President Donald Trump. The Dow Jones just closing at nearly 4% off yesterday's high. The Nasdaq just shy of 6%, and the S&P 500 down 4.84%.
And you know what that means. Today is not the day to look at your 401k. The sell-off on Wall Street is really shaking a lot of people up. You're probably wondering, what do I do now? Well, I asked financial expert Ted Jenkins, for instance, what should people under 50 do versus people who are closer to retirement?
Let's remind people that over a long period of time, meaning 5 years or more, generally speaking, the stock market does better than just about every investment. So if you have a longer term time horizon, you're not going to retire for 10, 15, 20 years or more, there is no reason to panic whatsoever. The stock market has always done well over the long term. However, if you've shifted to the phase where you need income, you don't make a paycheck anymore, and you need your investments to make a paycheck, this might be the time to reassess and say, are there better alternatives for ways to be a little bit more safe? The United States Treasury is only around 4%. Even your best money markets out there are only around 4%. So if you need to make 6, 7, or 8% of your money, you may have to look into alternative private investments. You may have to look into real estate investment trust or other investments outside of the stock market, because the bond market and putting money in cash generally won't get people the returns they need to recreate that paycheck.
So late this afternoon, President Trump said things are, quote, going to boom because of the tariffs. And Canada, meanwhile, announced a 25% tariff on American cars.